what's up? I'm gonna talk about like the past week and my thoughts and what I kind of want to do. I don't really want to make this video, but I am just because I need to document my thought process, I guess. Because I realize that low key no one watches these, so I can just say whatever the fuck I want. But yeah, let me start talking. So like I kind of try and center everything around Ethereum, but it doesn't always have to be around Ethereum, if that makes any sense. As long as I just have a coherent idea, then I can kind of see where the runners are gonna be, if that makes any sense. So I do want to kind of start in the metals market, and I really think gold here is topping. There are some statistics for why, and I don't really want to get into them, but they're like I know them in my head, and they're like, basically this is the ninth week in a row where gold has been up, and there's been like a record amount of days where gold hasn't had a 10% pullback, and there's like a bunch of like euphoria signs statistically for gold. And to add confluence to that, I did like write a paper about my Bitcoin purchase. I'll explain my Bitcoin purchase, or I haven't bought it yet, but I will buy it. But one of the things that I talked about in like my kind of my journal paper is that in the metal markets, people are not respecting this dip. Like I saw TikTok where I was like, you're stupid if you're not gonna buy the dip. Don't be paper handed and go get some more while it's on sale. Right? This is exactly what you see in euphoric markets. And I'm not saying every post is like this, but you only see this in euphoric markets. Not every post is like this in euphoria, but they only exist in euphoric markets, if that makes any sense. Like a complete disregard for risk, a complete disregard for dips, a complete FOMO euphoria attitude. You only see that in euphoric markets. And you don't need to see much of it. You need to see like maybe like 20% of the posts are like that. That is way too much, right? Maybe it can get to 30% posts, 35% posts, 40% posts. But it's like rarely do you see half the post being this, disregarding for risk and stuff like this. So the fact that I think it's already at such elevated levels. Obviously, this is anecdotal, right? And this is my own analysis. But the fact that I've seen anecdotally like these complete disregard for risk and a drop makes me think that the metal markets have topped or are close to topping, right? Maybe they haven't topped completely. Maybe they still have 10% to go. Because in euphoric markets, it's really hard to time the top. But what I'm trying to get at is the metal euphoria it's at its last stepping stones, right? It's right at the cliff, Like we're almost at the peak. Whether the peak's 10%, 15%, 20%, I don't really care, right? Because at the end of the day, once you get on that peak, it's going to be a free fall down, in my opinion. And it is just my opinion, but the higher we get from these levels, the worse the drop will be. Like if we drop right now, like at these levels, then the drop will scare a lot of people, but I won't think it will be as bad. But if we go to like $5,000 an ounce, then I think that'll be way worse than if we were to drop now. Because there will always be some type of mean reversion, and the farther you are, the worse the drop is going to be, basically. So yeah, I am starting to see like very big signs of euphoria in the metal market. Obviously, I sold way too early, right? I sold I think I bought like at maybe like 3,300 or something, like probably like right around here, and then I sold I think like 3,800 or something, and I was like, gold might get to like 4,200, but that would probably be in another few months. But it didn't. It got there in a few weeks, and it's just been running up ever since. and that's completely fine. I don't really care. But this is definitely euphoria, and there have been correlations with gold and a risk on assets, obviously, like Bitcoin. So I am gonna talk about that now. So I do talk about it in my paper, but basically any dip for gold is immediately like disregarded. However, like the SPY and Bitcoin have dropped recently. Like the SPY dropped 3%, and we're basically 3% from all-time highs, right? And people during this dip were like pretty scared basically. And I have some clips, but basically today is not making me feel great about the market. TAW goes in full swing and can't even get a meaningful push over yesterday's close. There goes crypto. From my perspective, the market is extremely overbought. All the tweets and tariffs are excuses. We actually look at the AAII members and how they feel about the stock market, and almost half of them are bearish, right? And it took a week. 3% drop made 35% to 45% bearish, right? That's a 10% increase in a week, right? And we had a 12% decrease in bullishness, right? Like just that quick 3% drop in the day made everyone switch, right? They made everyone, and this is a dip that is respected, right? Completely opposite from the metals. People are scared. People are like, oh, should I buy the dip? What should I do? Obviously, there's some people saying to buy the dip. People will say to buy every dip, right? But there are there's a large outspoken group of people who want to exercise caution and fear, and that in my opinion means we have more room to run, right? Yeah, crypto is dead. It's been an honor to lose money with you all. Got liquidated Friday, and then talking about conspiracies and stuff, and then talking about the regional banks. I think that's fear, uncertainty, doubt, right? Then talking about liquidity crunches, lots of weakness in crypto. So completely opposite tone from the metal market, the SPY and crypto. Completely opposite tones, which is why I think we have more room to run in cryptocurrency and in the S&P. And then obviously there's dang, did it not save? Oh, it didn't. Oh no. Well, there's like some global liquidity thing. Did I ever get it? Oh, that sucks. Maybe it was this. It's literally like a light. I don't think it was this, honestly, though. Yeah, I don't think it was this. Can I move the days? Yeah, like 90. Yeah, okay, yeah. So this is kind of the correlation that people, I guess this is total, sorry. How do I fucking do this shit, man? Boop, boop, boop. Yeah. Alright, yeah. So this is basically everything. And we had a crash in liquidity, and Bitcoin, I guess, crashed beforehand. But now people are like saying Bitcoin, because this is a 90-day offset, so this is already lagged, right? So the global liquidity looks good, and there is some correlation with global liquidity and Bitcoin. I'm not saying it's like 1-to-1. I'm not saying it's exactly like here maybe isn't the best example. But I mean, when this went up, again, this is 90-day offset, then this went up 90 days later, right? This went up 90 days later. So there is like some correlation in my opinion. How I'm kind of viewing it is When global liquidity goes up a meaningful amount, Bitcoin overshoots that. When global liquidity goes down, Bitcoin undershoots it, like goes more down, right? Um, and I think we can kind of see that like here, I guess. It's not always happening, but I think it sometimes happens. And here, global liquidity's been steadily rising. Oh, I guess this is Ethereum, sorry. Let me, yeah, I mean, I guess it just, Bitcoin has been going up more than global liquidity, but like, but now it's not true, right? Because now we're like at global liquidity. So I do think we could pop up here. And I do think this pop up would be a more euphoria run. This is just speculation, but it doesn't really hurt, right? Like if global liquidity was like going down all of a sudden, like now that would be like, okay, well, what's happened when it's gone down in the past, right? Like not very many good things, right? And it's not going down, it's been going up, right? And Bitcoin actually hasn't been following it that much, which means maybe we could get like a closing of the gap, kind of, where like it shoots up kind of like last time and has stayed up. But obviously I could be wrong. Global liquidity says that like we should probably be at like 128k, 126k right now. So global liquidity hasn't gone up that much, which means maybe we could just be consolidating here and then alt run. I don't really know, but global liquidity isn't hurting our case, kind of, for a Bitcoin purchase at least, right? Yeah, and then another thing is, how do I save this, man? I don't know why I named it PayPal, but so there's that. And then this whole idea I've been having is if you overlay Bitcoin, and these are all not really in the paper because I didn't want to type my ear off about this, but basically whenever gold goes up, like gold had this very large run, Bitcoin stagnates or goes down, and whenever gold corrects or has a pullback, then Bitcoin goes up. And it's really been playing out like the last 2 to 3 times. Like gold went up, then Bitcoin went down, then gold consolidated, then Bitcoin ran up. Now gold is having euphoria, right? Like this is not a run up like last time. It's not like a run up. It's not like this run up, right? It's like a quick euphoric spike up, right? So I do think whenever gold actually corrects, which I do think it will be soon, I think that correction will let Bitcoin run up because gold is like one of the biggest asset classes, and I think it's sucking liquidity out of a lot of other stuff because I think it hit like 30 trillion market cap or something, right? Imagine it corrects back down 10%, right? I think that's like Bitcoin's entire market cap right there. So I do think a gold pullback would probably signal a more risk-on environment. And this risk on could have a euphoric run just like gold did, though it's just speculation. But I don't think it's something to entirely discount. And it does kind of, it doesn't, and the global liquidity also kind of like comes into that. It doesn't really push our idea that well, but it doesn't hurt our idea also. You know what I mean? So like is that. Yeah, the only concerning thing for me about Bitcoin is how so basically these are kind of like whenever it goes down there's a bunch of volume, and I don't really like that, so I have been playing it a lot safer. So my whole idea is like I did like a volume profile, and whenever it gets like it closes a few days above 120k, I might just enter in Bitcoin. And the reason I would do Bitcoin instead of Ethereum is I am bullish on Bitcoin dominance just because of the spike up. And last time we had a spike up, we actually like slowly grinded up and then we had a crash. And I do think as long as we do not make a higher high, then the next crash will be alt season. So like as long as we don't clear 66% again, I think we could go up maybe to 63% maybe, and then crash down, and then that would be like a like a lower high formed and then we crashed down. Though if you look at last time, we actually did sweep the high and then crash down. Though I'm not sure we have time for that, though it wouldn't surprise me if this entire cycle lasts until May of 2026. And I do think there are signs that are starting to point to that, and a lot of this would allow us to have time, right? Let's say like Bitcoin dominance slowly grinds up, and everyone's like, oh, there's no alt season. This was supposed to happen November, December, and then like maybe we get like a crash here, and people are like, oh, this is all we got or something, right? During December, and then like we just consolidate and immediately spike up, and then like have our alt season down, and this would be like a sweep, and then we have like a huge crash down like last time. I'm not saying that's gonna happen, but I do think it's a possibility, and until it's proven to me that there's an alt season, I don't really want to be in altcoins like Ethereum. Though I do have some in Ethereum because I do like Ethereum. I don't want to have like a majority in Ethereum. So until like Bitcoin proves to me that it's gonna be like an alt season, I'm not gonna get in other altcoins other than Ethereum, right? So there's that, which is why I'm doing Bitcoin instead of Ethereum. Though Ethereum does look pretty good actually, because there's a bullish divergence on Ethereum, but I don't do too much technical analysis. I don't like technical analysis too much, but I do think like maybe Ethereum has bottomed, though I do think we could go farther down, because like in the last cycle we have like pretty much every correction on Ethereum Bitcoin went below the bull market support band, so it wouldn't surprise me if this went below also, though it's not guaranteed, right? So yeah. So yeah, that was kind of the reasoning outside of my paper. So I'll kind of talk about my paper. I guess the big picture is that I do think we are towards like the end of the cycle. I think that's kind of an obvious like frame of mind, and since we're at the end of this cycle, a lot of euphoria, a lot of risk on will happen, which is why I'm in crypto in the first place, right? So yeah. So kind of, well, because this was kind of more rigid, and then I took some statistics, and the statistics were actually this week is supposed to be pretty bad, and then November to December is supposed to be good. And I like the statistic because I think it captures psychology in the markets. So basically we have a good January to September with a good September. So like a plus 10% January to September with a positive September. And I do think that frames markets, and it captures the psychology of previous markets and will apply them to this market, which I do think is relevant. So with similar psychology, because I do think this statistic captures psychology again, we have a good November to December. So this is my base case for a good November, December, and I do think it is relatively powerful because the statistic is not like meaningless. It's not like talking about buying on a Friday, and Fridays don't mean much. You know what I mean? Like you have a good January to September with a good September, and it frames a lot of the Q4 action, in my opinion. It is just my opinion. And then this was some statistic I made, and basically was saying that we are due for a mean reversion on the S&P, and this is why I've also been cautious about the markets, but I do think we could have another 2 more months to run. Like if we have a mean reversion here on the S&P, then I think the end of the crypto cycle might end in May of 2026. But if we do not have a mean reversion right now, then I think it will end in December, most likely, right? And then maybe we have an alt season in like end of December, January or something. And that's because this would be like the tail end of this euphoric rally before the last mean reversion. So we had a mean reversion, then we had a euphoric rally for like maybe 3-4 months, right? And we're at the tail end of that rally, and that's kind of when things get parabolic in my opinion, though I could be mistaken, right? And we have a mean reversion, but I think that would just push down my timeline because usually everything happens the same, though the timelines may be different and stuff like that. You know what I mean? Like risk assets will typically go parabolic at the end of a cycle, but whether we're at the complete end of the cycle or not is up for argument, right? And what these risk assets are change over time, right? But I do think Bitcoin and Ethereum are, really good examples of risk assets to invest in at the end of the cycle. So yeah, and this was kind of why I sold in September. I didn't sell everything. I sold maybe 60 to 70% of my positions. So I still have some of my positions in cash. So I still have some of my positions not in cash, but I am looking to buy back in, right? And I'm trying to buy back in at a reasonable price. Because I don't want to experience more drawdown, right? Because I did kind of expect this volatility to happen. So yeah, I talked about this. And then this was kind of where I was doing some of my own statistics. So I was trying to capture the current market conditions. So I did between a 2.25% drop to a 3.33 so a 2.25% drop to 3.25% drop, and then the 2.7% SPY drop is in the middle, and it gives you a 1% range. That's why I did this range. You could do 2% to 3.5%, and the statistics don't change that much, though they do change. And in my opinion, they change because the psychology changes, right? Like a 2% drop may not be enough, and a 3.5% drop may be too much. So that's why I chose this 1% range to capture the most similar psychology of what just happened, right? So the 2-month returns when the 1 week was positive means we have an 83% win rate over the next 2 months. And then the average is 6.2% from the 3% drop to the next 2 months. And we actually did have a positive 1 week. So I do think the statistic is in play, though negative events did happen. This wasn't like out of sample tested. I did test the parameters and stuff. And the statistic is more so for confluence, not for basing stuff out of. I'm not saying we have an 83% chance that the SPY is going to go up now since it ended positive. I'm just saying that, hey, the statistics kind of agree with us, right? And similar markets with similar psychology, this is what happened. And this is actually what I think is going to happen based off of sentiment at this point, right? Because sentiment is respecting this dip, sentiment is scared, sentiment is bearish, right? Now, positioning may or may not be super bullish or bearish, but the sentiment is kind of what I think matters at this drop, since there is no extreme positioning on the bear or bull side. So I did do the statistic for Bitcoin, and then I did do out of sample testing and stuff just because it had less data. And actually this was way more bullish than I expected. So basically, when the SPY drops between 2.25% to 3.25% and Bitcoin ends positive on the week, then the average 2-month return is 32% for Bitcoin. And then when you do, and you also have an 88% win rate. And then when you do out of sample testing, you have a 100% win rate, and the average 2-month return is 20%. Which, I mean, there isn't too much data, but I do think the statistic is important. But ironically, we did not end positive, right? Because this was like the close. This was the close for the drop, and then when you go like this was Friday, so you go Friday here, and you ended like 4% lower. So the statistic isn't in play, though the SPY statistic I think backs us up. And then Um, I'm not gonna say what happens if Bitcoin drops. Um, I'm sure the statistics are bad, but I'm not sure that it's very meaningful to capture, because this this I think is a bit is a bit weird in the sense that gold is rallying, and I think gold is sucking up liquidity, though it is just speculation. But like gold went up, I don't know, like 40% or something. Like it was literally like at 3,300, now it's at 4,300, right? It's like a 30-40% rise in a month. Like we're talking about a month, so like I don't know how many trillions of market cap got added to gold. Oops. Yeah, so yeah, there was that. Oh my gosh. I guess this will be a private video. Cause how do I, that's whatever. I guess I'll just, maybe make it for myself. I'll just make this a private video. Yeah, so another thing is rolling 1 month of demand. So retail did buy this. I mean, I guess retail, because it was before the dip, retail's been buying like crazy. And my whole idea is, if you kind of look at similar areas, I mean, obviously you could say this is kind of like 2020, but I mean, this really doesn't give us too much information. I do think I was kind of framing this to be more bullish than not, but like we have been on a steady uptrend, and then we had this scare, now we have this run up. I think it could stay here longer, since I don't know, like I was thinking kind of like 2021. Like we had this scare here, we have this scare here, then we have this run up, and maybe we stay here for a little bit. Though it's just speculation, but if like retail demand was like at low levels here, I'd be like, okay, what is up? You know what I mean? Something's happening here. But this is kind of all expected, stuff like this. Then there was this statistic. I don't really want to talk about this. But yeah, I do think I kind of framed what I was talking about. So my plan is to buy Bitcoin whenever it gets above 118K with daily closes, because I think all of the supply may go away. And I'm buying Bitcoin because I'm bullish on Bitcoin dominance. I don't really know where Bitcoin's going to go. I kind of think my price targets are kind of like 150 to 175K. But I am going to exit based off of sentiment. Like if I see people posting screenshots of their gains and stuff like this on Bitcoin, and maybe like Bitcoin calls and leverage Bitcoin, then I might get out of Bitcoin. Though if I just see like an extremely like violent upswing in Bitcoin, I might ride it and then switch into Ethereum, because my whole idea is Bitcoin runs and the altcoins will lag, because Bitcoin kind of has to prove that we're still in a rally, since a lot of people are skeptical right now. So yeah, so that's kind of what I've been thinking. And then yeah, so like Bitcoin rallies, and then I switch into Ethereum, and then I stay in Ethereum for the sentiment. So like once people start posting screenshots of their gains and stuff, I'm gonna start scaling down my positions. And honestly, once I want to start posting a screenshot about my gains, I might just sell all of my positions, because I really do think the screenshot method works very well. The second you want to take a screenshot of something, there is probably like an 80% chance you're near the top. You may not be at the top, but you might be 5 to 20% within the top. And it's like, it's not always true, but I do think it's very like close to the truth, because you see a lot of people talking about, oh, I should have sold when I took the screenshot. Oh, I should have sold when. And a lot of people just say, oh, I should have sold, but then they don't. The next time it happens, they never do. You know what I mean? So it's like, I do think selling whenever you want to take a screenshot is a valid is a valid strategy. And I think my whole base case is that euphoria is coming into crypto. So whenever that euphoria hits, at some point, everyone will want to take a screenshot. And I do think whenever I want to take a screenshot, maybe that will be the time for me to start scaling down my positions, for me to start selling. And when I see other people post tons of screenshots, I'll be like, okay, maybe I didn't get all of the gains I wanted, but a lot of people are extremely euphoric right now, and I'm just gonna have to scale down my positions and sell out, right? So that's kind of my whole idea. That's what I've been planning for the last since September, honestly. Yeah, and I don't want to get in too early and I don't want to get in too late, but I do think at 118K I'll just be riding the upwave. I think it really minimizes my downside just because if we actually get above 118K, I do think that the chances of it being a fake out are extremely low since we already had like a sweep and a correction downwards. So I think another sweep would kind of be silly at this point. I'm not saying it couldn't happen, but yeah, I mean, if we have another leg up, then immediately go below the 50-week SMA, then I would definitely get out. My position size for this trade will be pretty large, and that's because it's a high conviction trade. I do have issues with risk management, but my risk management has gotten a lot better, so I do think allocating like 35 to 40% of my position in this Bitcoin trade is reasonable. I would still keep like 20 to 30% cash, and then I don't know, like 15% Ethereum, and then other stuff I don't really care about. So yeah, that's kind of my whole ideas, and yeah, I guess I'll just watch over this and see if my thinking is right.